Hi, I'm James Davis with James Davis Realty Group at Keller Williams 1, and welcome to Conversations with James. Today, I have a special guest with me, Jill Burgess with Ameris Bank. And Jill, I'd like for you to introduce yourself. I know that you and I have done quite a bit of business together. We've helped a lot of families to get into homes, and so one thing that I'd like for you to do is just introduce yourself and just tell us how long you actually been in the business, and we'll just start from there.
Sounds fantastic. So my name is Jill Burgess with Ameris Bank. I have been doing mortgage lending, I'm getting ready to tell my age, since 1989, so a long time. I got into it and it became a passion of mine, and I have enjoyed it ever since. First-time home buyers are, of course, my specialty in the fact that I love working with them and helping them become homeowners, especially first-generational people. So yes, that's one thing you and I have done quite a bit with, and I thoroughly enjoy it.
Well, good. And one thing I want to actually concentrate on today, I just wanted to be able to talk to the audience and let everyone know exactly what we're doing and exactly what's going on in the market today. And so with that being said, I'd like to ask Jill a few questions about the products that she actually offer to potential buyers, also sellers as well, those who's looking to refinance their homes. And so, Jill, in today's market, what exactly are you seeing as far as the products that you're actually using, the products that most of the buyers out here today are actually being able to take advantage of?
So since COVID has hit, it definitely made some changes in lending, and we're seeing even more so a couple different areas where conventional, which is Fannie and Freddie, have tweaked some areas. So we have some COVID rules now that we have to deal with, and especially with this market, as we all know, and it's across the country, we have a very limited inventory. So the first thing I tell any of my buyers when I start pre-qualifying them is the word is patience.
Yes.
It's unfortunately very rare that the first offer is going to be accepted, as you know.
This is true.
It's going to take quite a few. Most lenders across the board, and most sellers or anything, conventional is, of course, the predominant one that they'd like to have. They seem to have maybe a little bit of misunderstanding with FHA. Unless the property really has major issues, FHA usually doesn't have problems. And they say, of course, the values, but actually my FHA appraisals have been coming in just like my conventionals have, just like my USDAs have, just like my VAs have. So if the value's there, they're coming in.
Okay. Well, I'm glad you touched on that point as far as the FHAs compared to the conventional, because we do know that the guidelines are different between the two. Mm-hmm. And however, there's a misconception going on with a lot of sellers out here. And so I'd like to be able to educate the sellers as well and just let them know that, as you mentioned before, as long as those homes are livable and in great condition, mm-hmm. they really don't have to worry about the FHA loans.
No.
And so with some of the other products that you're actually offering besides the FHAs, the conventional loans, where are you seeing the interest rates right now, and where do you think they're going to go in the future, or do you have any kind of
crystal ball?
We really don't know, but however, what forecasting out, where do you see the rates going?
Rates have kind of leveled out. The government rates, like we talked about, the FHAs, the VAs, the USDAs, they're probably mid to high twos, low threes. Conventional, sometimes I might make it under the 3 point mark, but usually you're going to see somewhere between 3 and 3 1/4. All the analysts that I hear say as the economy recovers that we will see interest rates continue to increase. It's just like where we've seen them increase in February and March. They've leveled out a little bit in March, but, we started seeing this, major boom in hiring, in all the different companies forecast, saying they're just record, levels of, making money. So in turn, the economy's healing.
Yes, it is.
So it is healing, and so the rates will follow the economy.
What products are out here for first-time home buyers that you're seeing that's benefiting a lot of homeowners? Those who's wanting to become homeowners.
Absolutely. So, so there are certain first-time home buyer programs, okay? One for all of North Carolina is North Carolina Housing Finance Agency. It offers an $8,000 if you are a first-time home buyer, and the definition of a first-time home buyer is not having owned a home in 3 years. Now, that is very strict when it comes to that. So the thing with that is if you marry somebody that already owns a home, then you immediately are no longer a first-time home buyer. If you inherit a property from grandma in Ohio, that's still the same thing. You now own a home. You're not a first-time home buyer. So that's something to make sure of. It's $8,000. It's forgiven after year 15. It starts being forgiven after year 10. One of the nice things that they did change is they only look at the household income now of the people that are going to be on the deed. Okay, so that has changed. It used to be they looked at the total household income. In Guilford County, the income is 72 for household of 1 to 2 and 82 for household of 3 or more.
Okay, and what about credit score?
Minimum credit score for that program is 640. Then they do have 2 different other programs that offer down payment assistance of 3% or 5%, and you do not have to be a first-time home buyer for that.
Okay.
It only looks at the person that's qualifying. So let's say that you have a total household income that exceeds the what I gave you earlier. If the one person does not exceed $92,000, I can focus on just that one person.
Okay.
So it does give you some different options. You also have a mortgage credit certificate that we use sometimes, even if the clients aren't using down payment assistance. And that just gives you extra funds at the end of the year on tax time. There's also a CPLP that is a lower 80% median income, and you can actually get up to $30,000 in that.
Okay. I have a lot of clients that works in the medical field as well.
Mm-hmm.
And what products do we have out there for, say, the medical field, such as your nurses, your first responders, doctors? What type of products that you actually carry that you're seeing in the market today?
Sure. So we offer a medical professional program that is 100%. And unlike some other ones, we actually do many different. So not just doctors, we do physician's assistants, we do pharmacists, we do dentists, we do veterinarians, we do osteopath, we do chiropractors, podiatrists. There's a couple more, but that's what I can remember off the top of my head.
Okay.
So again, 100%, no mortgage insurance. We like to have a score of 700, but it's an in-house product, so we do have some flexibility with that. That's one of the nice things. It's not being sold to anybody. Ameris holds those loans. We'll go up to 1.6 million, and it's just and we can do fixed or arms, depends on how long they're going to be here.
What can you say to those individuals that have student loans? What exactly do you look at? Do you look at if they're deferred, or do they have an agreement in place, what they actually paying? Do you take a certain percentage that you have to take into account of when you're looking at that?
Oh, that's a loaded question, because, all of the above. So it really depends on the program. It depends on credit score. It depends on if you're doing any of the down payment assistance programs, okay? So let's start with conventional and what they require, and then we'll go from there, okay? So conventional, if you have an income-based repayment, and I understand everybody's in forbearance right now, but you have to have an income-based repayment, be set up. Even if you're not paying it, we have to show that.
Yes.
Okay. So conventional, if you have that true income-based repayment, Fannie Mae will actually use the income-based repayment. Okay. Freddie Mac will hold 0.5% of the student loan against you. So again, if you have a $50,000 student loan, I'm going to hold $250. Okay?
Yes.
All right. So that works out well sometimes when they don't have, they're still in school, that type of thing. I only have to hold 0.5% instead of 1%, because that is the rule. If you're not an income-based repayment, it's 1%.
Okay.
Okay. So once you layer that with down payment assistance, it does make it harder to get approvals. So you know that. And unfortunately, Fannie and Freddie conventional have tightened up again. So it is harder when you're in an income-based repayment to get approvals through them with the lower down payments and the down payment assistance. So, that's something I try to prepare people for. Okay. If you do have those, you probably are going to end up in the more 5% down payment unless your scores are extremely high. Okay. If your scores are to an extent that we have to do FHA, then we automatically have to hold 1%. Okay. If we have USDA is 0.5%, and then VA has a different calculation where we do 0.5% divided by 12. So they all have different variables, and I won't lie, that's the first thing when I pull that credit, and I just sit there and go, please don't have a lot of student loans, please don't have a lot of student loans. Because it's really it makes it hard. It makes it hard on the client, and I get it. But those are the rules we have to deal with.
Okay. I heard you mention Freddie and Fannie. Mm-hmm. Can you tell me exactly who Freddie is and exactly who Fannie is?
Sure. So when you hear conventional, there are two different parties to the conventional lending. Fannie Mae is one, and Freddie Mac is the other. They each have their own what we call automated underwriting. Okay. So what that means is I put all your information into a system, okay, and it spits out an approval, or it spits out not an approval, what we call refer. Okay. The downfall with conventional is you cannot do a refer. Okay. With the government programs you can. With the conventional you cannot. Okay. And each one of them have little nuances, just like you heard me tell you that Freddie will do the half.
Yes.
Fannie will do the income-based repayment, or they hold 1%. So it's just knowing which of the programs you want to tweak to see if you can get it through. Okay, that's the nice thing of having both of them, is being able to just, like I said, tweak them and get them through.
Well, thank you. And I would like to thank everyone for chiming in and listening in to Jill and myself with Conversations with James. Jill is getting ready to give you a contact information, which we're going to have it across the screen as well. And Jill, if you would, you can give your contact information, if they have any questions, want to inquire about a loan, how can they get in contact with you?
Absolutely. So my online application is www.jillsapp.com. My cell phone number is 336-978-5120. My office number is 336-740-9068, and my email is jill.burgess@amerisbank.com.
Well, thank you.
You're welcome.
And thank everyone for chiming in again. And Conversations with James Davis Realty Group at Keller Williams 1. You can reach me at 336-681-8653. Also, we're going to have that across the screen, and you can also text or call me at that number, 336-681-8653. Thanks again, and I look forward to speaking with you on my next segment of Conversations with James. Have a great day.